Thanks for tuning in. My name's Hazley Kush, and once again, it's my privilege to facilitate the virtual property event on behalf of the Ray White Collective Group. And normal regular panellists with you today, Scott Darwin and Nick Gibbon, principal partners at Ray White, Bulimba, East Brisbane and Clayfield. Christine Rudolph, prestige property specialist right across Brisbane. Matt Lancashire, our principal partner. Nerida Conisbee, we always have the great joy of having you, Nerida, and we always want to hear that information as to what's happening right across Australia in terms of the market, but specifically here in the southeast corner. So Ray White's chief economist, Nerida Conisbee. Now, we've got some breaking news, I suppose, with inflation figures. Good news coming out of that. We've seen interest rates hold. So can you talk us through it?
Such a relief. Interest rates are on hold this month. It doesn't mean they'll stay on hold, but it does give a little bit more of a relief to mortgage holders. And it's also really good news for the property market.
Girl, you rockin' like... All right, Nerida, take us through the numbers.
It's really interesting at the moment. Property is always really interesting. I'm sure you would agree with me.
Totally.
What we're seeing at the moment, there's a lot of push-pull factors. On one hand, interest rates are still very high. Inflation is coming back, so that's very good news. But at the same time, Queensland is growing very, very quickly. And what we saw through the pandemic, we did see a lot of people from Sydney and Melbourne moving up here. But now that's still happening. We haven't seen a huge reduction in that happening, but we're seeing a lot of overseas migrants coming. So lots of people coming here. At the same time, we do have a shortage of housing, and we've got a shortage of houses being built, apartments in particular. We've got a real shortage. Construction costs are starting to come back.
There was a report by Scott Hutchinson put out just in the commercial space that they're expecting prices to increase by 1% a month.
In terms of construction. Well, so people only need to pick up a different media publication each day, and there's a news story of a construction company that's in liquidation or not building. So that's only less supply, right?
Absolutely. When we have a look at the amount of the homes being built, even over the past 12 months, we do have huge shortfall. So there's just not enough homes for people to live in.
There's that, but I think maybe the construction cost is going to come down like the materials, but I think labour is probably one of the biggest issues.
Yeah, absolutely. Materials costs have come back, but also Queensland does have very strong unions, and so that's another factor that we're seeing, that is construction costs actually rose the fastest in Queensland of any state in Australia. So.
Yeah, and we probably have the greatest need for the properties.
Yeah, the greatest population growth. So lots of people, too few homes. It's flowed through to rent. Rental growth has been very, very strong over the last couple of years. We're starting to see the rate of increase start to slow, so that's positive.
In that rental space? Yeah, because they kind of hit a peak, right?
Affordability, yeah.
Or was that landlords saying, well, interest rates have gone up, I need to get the rent to cover those interest rates? Or
well, you can't just do that. If there's no one, if there's a cheaper property, someone always go the cheaper property. Right. So it's not greedy landlords. It really is just a shortage of homes.
Like, you can go to open houses for rental properties in our rental side living here. You can't get into the apartment. It is jammed like seagulls on a chip. There is no space into that. I think I might have even talked at a previous one of these sessions where we had a one-bedroom unit, 146 applicants.
And people that 12 months up front.
People are offering more. People are incentivising it. Interestingly, that property, the tenant had to break their lease, and since the last session, it came up. Now, there was 30 applications. So 30 is still plenty, but it's a long way from the 146, which is probably what you're saying, where prices are steadying.
Yes, absolutely. And it's also, people seem to be moving in together. So when we have a look at household size and the number of single-person households, it is starting to reduce. So, if you can't pay your rent and or finding it difficult to pay your rent, it makes sense.
It makes sense to bring people in. That second bedroom. People are paying up to $350 a week for that bedroom. In a normal two-bedroom apartment. It's quite an uplift.
Yeah. So rental market still pretty strong. The rate of growth starting to slow, but prices are still on the move. And when we have a look across Queensland, this part of Queensland, Brisbane, is the fastest growing area. It's seeing the strongest percentage growth. Interestingly, in Australia, in Queensland and particularly Brisbane, we are seeing apartment prices moving quicker than house prices. So
Sale now.
for sale. Yeah.
We've seen it now the front line.
Yeah, that's going to come.
Yeah. So interesting. So, I mean, we rarely see that, but it's, clearly the case that that's happening at the moment. And then on the lending side, investors are back lending. We are hearing a lot around investors selling those. So I think some of the challenges around particularly government policy towards landlords is starting to show up in for some investors just deciding to get out, which is worrying for the rental market.
Yeah.
But overall, there is a shortage of properties for sale, and but some more positive signs for listing authorities. So that's the point at which a Ray White agent is signed up, but the property's not yet listed. Nationally, we are starting to see a little bit of a pick up, which is a good sign.
Yeah, okay. In terms of more properties coming to market.
Yeah, a much better spring.
Yeah.
Yeah, that'll probably show it a little bit of data I'll go through soon as we've seen such a shortage of available properties. But what we're seeing is this crossing of the bands. So investors aren't in the market buying investment properties. It's home buyers, largely first home buyers, are buying investment properties from landlords. So these landlords are getting to the end of the lease and saying, I'm just going to sell it. Mm-hmm. Some of them are incentivizing their tenants to leave the lease so that they can sell it to these home buyers. And then there's incentives for tenants that are out there looking, thinking, well, I can't find a property. They're talking to a mortgage broker, and the mortgage broker is saying, you know about this first home buy guarantee scheme? Oh, yeah, well, that won't work for me. I've only got 5% deposit on that 10%. Oh, yeah, you can buy at 5% with this scheme. Oh, yeah, but I don't want to pay the mortgage insurance. Oh, no mortgage insurance. Oh, interest rates are up. Oh, we can help you get a better rate because of this scheme. So it's dragging tenants that would have taken another couple of years to save the money forward into this market. And they're really coming in. And investors are looking at that going, well, yield's not as great in terms of in my pocket after expenses, even with the increase. But against interest rates and other things, maybe I will sell. And I think you're going to see that in that pre-launching authorities right now. There'll be a lot of investors.
I'm seeing that at the moment. I had one last night where the owners are like, we're now wanting to give the tenant, pay them out early so we can get in and get the sales process going.
You're going to see a lot of that in the coming months while there's a waiting pool of buyers.
Yep.
What else have you got for us today?
Well, first home buyers are back. So, that's showing up in finance data, so that's pretty consistent. But, look, overall, it does seem like house price growth across Australia is pretty firmly entrenched at this point. They have been growing since the start of the year. Queensland is, certainly the place to be longer term, and we are seeing a lot of population growth expected to continue. So, a lot of positivity in premium markets, in investor markets, no matter where you're looking in particularly Southeast Queensland, it's looking good.
Yeah, okay. All right, well, look, grabbing a hold of that, I think the key message that we've got from you then, Nerida, is lots more demand is coming. Supply is in some ways almost shrinking. It's shrinking when you see how big the supply is getting. This time when we did this session at the end of the financial year, or this session probably last year, that market that we were in, not the market we were reflecting on, that July market last year, I can tell you in the rear vision mirror was really tough, and I can see it here that it was just before that. Last year we did in the April to June quarter 233 unconditional sales, and the year before that we did 245, and the year before that we did 248. So circa the same sort of number. But let's look at the inspections that led to those sales. 3 years ago in that 21 year, 10,271 inspections led to the 248 sales. Last year, 6,200. That was the cliff that it fell off, and we saw that. We felt as a business that quarter that followed, the July to September quarter, was tough. That was really tough. The market recovered, and we can see that here. We then saw an uplift this year, 6,731 inspections, so a little bit of an uplift on the numbers that led to that. And what we think is less property available, lots of buyers in the market.
So the same amount of transactions.
That's right. And the sales has really started to come through. Rental, in our rental side of the market, Matty, before I go to you on the prestige space, we've seen the different bands move, and you moved to this. We're like, oh, why is the over $500 a week band moving so quickly? Oh, that's because that used to be the 400, the $0 to $500 a week property. The same property is now in the 500 to 1,000 a week property. So that's seen a sharp uplift. Under 700 or under 650, still a real shortage. Supply demand is right out. It's really tough for a lot of people to find rental properties. But above that, we're starting to see days on market really stretch. There is properties available for people. I want to let you know that. And even in the sub 700, days on market have stretched. There's still a lot of competition, but it's starting to stretch. There are a few more available options. Swapping over the prestige market, Matt, let's talk about what's happening.
Yeah, great. Look, it's been an awesome year. I think there's a few factors to that. We've just touched on stock levels, new listings to market, down significantly. So we've seen 30% across the inner city of Brisbane, new listings to market, down. In some areas such as Hawthorn, Bulimba, down 50%. New listings to market. What we've actually found, if you look at the metrics and the buyer inquiries that we've had in inspection numbers, we're up 30% on new inquiry coming into the market. So when you're looking at a supply and demand balance, you go, well, there's no supply, there's a huge amount of buyer inquiry, and it's just created momentum, which has held the market really strong.
When you talk prestige, just for people watching, I mean, that number's moved now. What's prestige?
It's changed. Well, I remember it was 1.5.
Yeah.
then 2, then 3. I'm sort of now talking probably 3 plus, maybe 4.
4 million and above prestige market.
And look, we had 2 auctions on Saturday. One was in Katoomba Street, which I'll get Scott to talk about in a moment, which was a house in Hawthorn. And that sold under the hammer for $5,250,000.
Yep.
Just no supply.
Yeah.
Another one we sold, which was in Crescent Road in Hamilton, which was, we had 7 registered bidders on that and sold for $5.2 million under the hammer. So what was really interesting about those ones is they were both turnkey properties, right? Where you didn't have to spend any money. So people were going, a lot of the buyers that were looking at them either had architectural plans on their own homes and decided, hang on, I don't even know builder was going to do a fixed price contract. They're going to do cost plus. We don't know, like, to get the builders, to get them agreed, get the price, you've got no certainty of the cost. You can go and buy a turnkey property, pay your stamp duty, and that's it.
Yeah.
That's your price.
No 2-year waiting, no unknown, no variation surprises, no every conversation about what's the floor covering's going to be. Done. 30 days.
So that is in that top end of town, that is what's selling really well at the moment. Some other factors to it, which Nerida touched on before, was interstate migration.
Mm-hmm.
So we're seeing 1,500 people a week coming into Southeast Queensland at the moment. So I think the Sunshine Coast, the Gold Coast, has sort of slowed a little bit, and people are going to capital cities. That's what I'm seeing on the front line. Sydney and Melbourne, more so Melbourne still, coming up in droves, and then the expats coming home. So 50%, my average sale price at the moment this year to date is $5 million. 50% chance of selling to a local, upgrading, downsizing, whatever it might be, and 50% selling to interstate and or overseas. So it's a huge statistic when you're looking at that. 50% local, 50% from coming into Southeast Queensland.
And regular viewers of this program, you've been saying that now for at least the last 4 episodes, like that is 50-50. I know that they're 50, the other 50% are coming from different areas, but the locals are still holding firm at 50. They still see the value in the market with all of this migration.
It took them a while to realise that, hey, this isn't just, it's not just commentary, it's actually a trend.
Yeah, and a reset of pricing.
And the reset of pricing. So anyone that was out of the, like that was looking to buy prior to 2021 price growth, they took about a good 6 months to a year to go, we should have bought before 2021. Yeah, that we saw the 30% increase on price. Sydney and Melbourne expats coming home came in. They were like, this is value.
Yeah.
Buying, and then now that's brought up the rest of the market. Now that price point is set, you got a 50-50 chance of who you're going to sell it to.
I love that. So when we get to our market flyover today, the key message, supply demand. Now, then you add in the other matrix, and I think the 2 other things to consider, high-end market, the cost of construction is giving that a bit of a turbocharge, and then unit with these first home buyers getting incentivized, that's giving it a bit of a turbocharge. So the whole market has a supply-demand issue, but units and prestige properties are the 2 hot buttons. All right, let's cross over to our panel who are going to go through a market flyover. Christine, if you could take us through what's happening in each market.
Thanks so much, Hayes, and that great commentary there on what's happening with the prestige market. Leading on to that and also covering what Nerida has said, we're very fortunate to have some incredible facts that have been brought together by the economists in the Ray White Group, and that's showing that Brisbane is definitely the highest performing capital city in Australia at the moment. We've seen some incredible results here in Brisbane this year, where we've actually had new benchmarks for prestige property. Matt, of course, setting the record of just over 20 million for Amity House, the first time we've seen a sale of that level in Brisbane. And apartments have performed incredibly well also, we've seen in Brisbane. We saw that sale in New Farm of the settled property that was in Maxwell Street that sold for $16.5 million, which is quite remarkable. So it's not just the 4005 postcode at the moment does remain the number one postcode in Brisbane. So the median sale price is higher than anywhere else. And as Nerida has given us some information, it's just incredible to see that growth that we've had in New Farm and 4005 in the last 12 months. It's jumped up by 490,000 with the median price now sitting at around 2.7. And the other interesting inner city performer, which actually comes in second ranking in the top performing suburbs in Brisbane, is actually Paddington. So Paddington is up 275,000 on the median price for the same time last year. Just looking at what our collective has done as well, really we're seeing a big surge in units, which I know Scott and Nick are covering as well today. But Art Deco and character units in particular are high performers. We've actually seen some tremendous results achieved by Carla Lynch this year. Carla selling a beautiful 2-bedroom in Elliston Court for over 1.6 million. Followed it up with the magnificent Coronet Court, which just about everyone in Brisbane knows, that iconic Art Deco building.
Literally double what they were 10 years ago. Right?
It is actually, Nick. That's exactly right. Double what you could have got in for 10 years ago. And she sold one there for 1.5 million. And the CSO refinery building, we've just had an incredible off-market result there. A record square metre rate for a penthouse, never been sold before. Original condition, 3.5 million for that. And that was on the back of a 2-bedroom sale in the refinery, which sold for over 2 million. So really some incredible results with units, amazing results in the prestige market. And Scott, you have been doing some wonderful things over in Bullingba. Congratulations on your great result with Katoomba as well. So like to hear a little bit more about that exciting sale.
Yeah, of course. So that was a wonderful campaign led by Matt and myself, and we're just really fortunate to represent those sellers in that home. It was a brand new architectural design build by Daha Architects on quite a large block, just under 1,000 square metres. So pretty rare to come up. Wasn't a developer sale, it was an owner-occupier that built it for themselves. There was better change in their circumstances. So because of all that, just such a rare commodity to ever hit the market. So we had over 130 groups through, crazy amount of inquiry, had 4 registered bidders and sold it under the hammer for 5.25 million, which ended up being a suburb record off the river.
And do buyers pick up on that, the quality of a home, when someone does it for themselves? Is it a noticeable difference?
Definitely in that scale, absolutely, and that echelon of buyer demographic, of course. So interestingly enough, we talk about this a lot, and from the collective, our buyers and our underbidders were both from New Farm. So that classic just growing family wanted just to get a bigger sized home. Unfortunately, that category of property is just literally unavailable in the 4005 postcode. So you've got to go to another suburb, and you've got the 4 historical markets of Bullingba, Hawthorn, New Farm, Tenerife, Paddington, and Ascot and Hamilton. So there's a really strong migrational pattern between those markets. So we did see that firsthand, which is great. And just a little bit more kind of granular on 4171. We've had in the last 3 months, if I go back to just jump across to 2022, so April, May, June, we had 154 sales with an average price of about 1.6 million across houses, units, and townhomes. We just had a reduction in those transactions that we're seeing across Australia and especially in
With
different
the
suburbs.
targeted stock.
Yeah, correct. So in the last 3 months, we've had 118 sales, largely dominated by apartments and townhomes, with of an average of about 1.52. So a very, very similar price point on average. Obviously, houses have come right back as far as actual transactions. So 30% reduction in total, about 50% reduction in houses in Bulimba, Hawthorn and Balmoral. And I just quickly want to touch on something we're noticing just on market trends, and it's something that's been happening in New Farm for years, and we're now starting to see it develop in other suburbs. And we've always said that certain trends are a few years behind, and we're seeing that kind of small lot house market go really, really well in Bulimba, Hawthorn, Camphill.
Terrific sales for
yeah.
all our homes there.
Absolutely. So Fiona Berkman from our office sold a house in Arnold Street, Holland Park West, sub 300 square metres on 281 square metres, had 90 plus people through the front door. 100 plus people through the front door. 9 registered bidders, sold for a suburb record of just under a bit over 1.5 million, which is just extremely
done product, right?
Yeah, finished contemporary style home in that kind of marketplace, just for a huge price. So we're seeing that people that don't want apartments, that don't want townhomes, want small lot, individually titled, no strata. So if developers are watching us now, if you can find those kind of sites, then they're going really, really well.
See, 3 to 5 years ago, we weren't seeing that. Like, I just sold a house with Libby Patrick, a colleague of mine in Stafford Heights. Small lot, 363 square metres. She bought it 3 years ago for $1,050,000, and we just put it on the market, and it is sold within 7 days prior to auction for 1.485 with multiple offers. And buyers are coming through thinking,
Right.
well, they're just thinking to buy the land, to build the house, to wait for 2 years to have it built. Why would I do that when I can buy it for less now as a done product? So we're really seeing that across the board, and the resurgence of the apartment market on the north side. I just had a 2-bedroom apartment just off Racecourse Road there in Ascot, and it's took 2 or 3 weeks to sell. But normally when a property goes on the market, the trend of buyers coming through goes down over time. We got it under contract, but we still opened it to be diligent for the seller. And we were still getting 10 groups through each open.
Yeah.
So we go to opens thinking it'll probably be 2 or 3 through today. It'll be 10 every Saturday.
Yep.
And I have not seen that in 10 years. So there's just that demand for apartments.
Do you think that's underpinned by just that rental crisis in that apartment space?
It has to be. But houses on small lots are still selling really well, but I've never seen the demand for apartments as I'm seeing at the moment. Not just on the north side, but New Farm as well.
I've always said yellow brick as well. If you get something that's built a little bit older, built in the 60s, 70s, 80s, they're always a little bit bigger, and people just love them.
And on the low body corporates, the old brick building with no pool, no lift, they are popular.
The old Italian builders knew what they were doing.
They did. They did. Yeah.
Beautiful. Well, thank you. That's a great flyover, and Clayfield, everything going really well.
Really well. Really well. Been over there for a year now, and it's I'm back home, exactly where I want to be.
Well, so much content and another great day. Thanks so much. That was another jam-packed episode covering the strength in the unit market, the power in the prestige market, and those changes coming right across. So, Matt, Scott, Nick, Christine, thanks as always. And Nerida, thanks for coming to join us again. Always a pleasure and a privilege. And please tune in and we'll see you next time.
Girl, you